afternoon, ladies and gentlemen. Thank you very much for joining us at this event organised by Policy Exchange and sponsored by Goldman Sachs. First of all, a bit of housekeeping. If you'd be so kind as to stick your phones to silent, it helps everybody. And there will be a Q&A session later on. If you'd be kind enough to say who you are and where you come from as well, that would help the panellists. So we're here to talk about SMEs, which, as people all know, account for something like 60% of employment in this country. They're the people who create the jobs, the wealth that this country benefits from. And we're going to be talking about how we best help SMEs, SME finance, and really the floor is yours as well, anything that you want to raise with our assembled panellists. So I will introduce them, and in the order in which they are speaking to you as well. So on my right is Ian Murray. Ian is the Shadow Business Minister for Trade and Investment. He also has the benefit of actually having run a small business in the past, so no one better to speak about the kind of challenges that SMEs face. After that, you'll be hearing from Fiona Laffan on my left here. Fiona is Head of Corporate Communications for Goldman Sachs in Europe, Middle East and Africa, and has a long history of having worked in banking, and obviously has experience therefore of bringing businesses together with capital. On her right left is Steve Hughes. Steve is Head of Policy, Social and Economic Policy here at Policy Exchange. Steve is also very well travelled, knows a lot about the business world, having previously worked for the British Chambers of Commerce and also for the Bank of England. And so again, no one better to speak to about the issues of bringing together capital with finance. And then lastly, on my far right is Gary Vizard, and Gary is an entrepreneur who has decided a few years ago to go it alone in the environment of clean energy, and his is quite an inspiring story, so I'm sure you'll be hearing from him shortly about how he went and set up his own business. Anyway, so that's enough about me. All of our, I'm Ian King, for those of you who don't know, business news, business presenter on Sky News. What we will do is hear from each of our panellists for between 5 and 7 minutes, after which we'll have a little discussion and then throw it over to you. So please do ask whatever you want to of our distinguished guests. Over to you, Ian.
Well, thank you very much, Ian, and thank you very much to Policy Exchange and Goldman Sachs for organising this, because it's a critical part of some of the discussions we've been having over the course of this, I was going to say week, but it's only been a few days, hasn't it? It feels like a week conference. I have run my own businesses, so I can tell you from both sides of the fence about how difficult it is in terms of finance and running small business. I've also had a couple of failed small businesses as well, and of course the main proponent of failure in business is cash flow. And that feeds into access to finance when starting businesses. And one of the stories that I will tell, just to highlight some of the issues I think that underpin the challenges that small businesses face in this country, is I remember distinctly back in 2009, I always was responsible on a Thursday evening, it was my last job, for paying staff wages. And banked with a famous high street bank who will remain nameless, Spanish, red and white lettering, and went on just after midnight, because that was when the salaries were processed, to process the salaries of all my 12 staff at that time, only to find that the overdraft that was available on the account had been removed without any notification whatsoever, and like many small businesses ended up paying the salaries of the staff at that particular time on a credit card. And the reason I tell that story is just because it highlights quite clearly the challenges that could be quite easily resolved in terms of the small businesses, in terms of cash flow and access to finance, but how quickly the pack of cards can fall when things go wrong. And I think we need to be trying to find mechanisms to support small businesses in better ways. Now, one of the big criticisms I would have of the current government is they've tried to get money into small businesses and access to finance, and it hasn't really worked. Of course, any penny that goes out of any of the high street banks or any lending opportunities straight into the investment of small businesses works, because they are the lifeblood of the economy that Ian said in his introduction. They are the wealth and the employee generators of the future, and we have to make sure we support them. And that's why we, as a party, set up the Small Business Task Force last year, really to look at all the issues around small business. And I know we're concentrating on finance, at this particular fringe meeting, but there was issues around skills, issues around knowledge, issues around access to local councils, local authorities, and all those kinds of issues, particularly around exporting as well, that are right at the top of the tree in terms of making small businesses competitive and able for them to grow. But one of the other big frustrations, of course, is a level playing field. There'll be lots of discussions, and I'm sure Ed will do. This isn't an exclusive because I don't know, but I'm sure Ed will talk a lot about minimum wage and staff and the workplace in his speech just after 2 o'clock. And much of that will be about making sure there's a level playing field, because the biggest frustration for small businesses is when the small business next door isn't playing by the rules. And many people see this as being an anti-business agenda, but actually it's a very pro-business agenda, because the decent businesses need the support to make sure that everyone is playing by the same rules, so there is a level playing field. So some of the things that came out of the Small Business Task Force was the British Investment Bank, a proper well-capitalised government-backed British investment bank that can get money straight into the areas of the economy and sectors that we see as being major growth sectors, and attached to that would be a Sparkassen-type German model of geographical or even sectorial banks that can look at key sectors of the economy and give them that support. One of the sectors that's probably worth highlighting is spin-outs from university. I think we're pretty dire in this country of supporting that gap between university research and development and spin-out to market. And I think one of the key things that the banking sector has been telling me over recent times, particularly relevant to small businesses, there seems to be a cultural aversion in this country to give away equity. And use that as a financing source as well. Now, and there's some other fantastic stuff. Now, I will probably turn to dust if I mention the Scottish independence referendum, but I'll do that in any case. One of the key aspects of that was people crowdfunding in terms of projects that they were running, not necessarily related to small business, but it shows you there is a real appetite out there for peer-to-peer lending, for crowdfunding, and for all those kinds of access. So it's not really just about governments going in and providing that infrastructure, but it has to provide that confidence to allow the banking sector to lend. I suppose the other perversion in all of this, of course, is and many businesses and many lenders say this too, is the government and the opposition are encouraging banks to lend as quickly as they possibly can right to the heart of the economy where it's most needed, at the same time as saying to them, please make sure your risk profiles don't put your responsibilities for capital requirements in jeopardy, and you're not risking the stability of the financial market. So there's a real balance there to strike as well. I suppose just to finish off my short introductory remarks is really just to say that this whole week, in terms of the Shadow Biz teams, about looking at small businesses and supporting them, and everything from British Investment Bank to regional banks to not taking the cut of corporation tax and putting it into rates, to looking at the energy market, which of course is concentrated on consumers, but small businesses are the biggest consumers of energy in this country, and trying to do something about that, and really supporting small businesses through that process is one of the key things we need to do as an economy. And I think we've really forgotten about the lifeblood of our economy, which is small businesses, and we need to do much, much more to support them through their journey, but also to support them with finance, because my own story in terms of what happened to me in terms of finance will be replicated hundreds, thousands of times across the country, and often with small businesses, it's family homes, it's savings, it's personal finances, credit cards that are used to support the businesses, and that's really not healthy for the economy. So a real drive for access to finance is key to growing the economy, and that's when unemployment will properly fall in terms of high quality, well paid jobs, and we'll be able to have confidence that people can invest and grow their businesses.
Thanks, Ian. Fiona.
Thank you very much, Ian. Let me start by saying it's a pleasure to be here in Manchester sponsoring the event today. Some of you may be surprised to see Goldman Sachs here sponsoring an event about small businesses. We're not a retail bank, and we don't lend to small businesses, but we do have a programme which we call 10,000 Small Businesses, which we think gives us some interesting learning and a perspective which should be valuable on this topic. We obviously, as Ian has mentioned, both Ians have mentioned, small businesses play a vital role in the UK economy in terms of economic growth and job creation. And as a significant employer in this country, we share the interests of others on the panel in terms of trying to stimulate growth in this country and ensuring we have a vibrant economy. What is our programme and how is it relevant? So we launched the programme in 2010 in Yorkshire, and it's designed to help ambitious small businesses grow. We think it's one of a number of important interventions in what is quite a complex jigsaw of support that's available for small businesses in this country. And Ian mentioned the role of universities, which is critical, and we've actually partnered with 5 universities in this country to design and deliver the programme. And here in the Northwest, we started the programme here in 2011, and we worked with Manchester Metropolitan University. The programme itself has been, some people describe it as a mini MBA. The reality is it's much shorter, people are still running their businesses, it's much more practically focused, but it's sort of the best short description we have of what the content of the course is, and maybe Gary can give a bit more on his experiences because he's been on the programme. But as I said, the small business leaders, they get to work on their businesses. It's not just a theoretical course, they're actually taking something away which they can then apply to their businesses and hopefully help them to grow and create more jobs. A few facts and figures, so 800 small businesses so far have either enrolled or completed the programme with us. 80% of people who've completed it are creating net jobs. And our earliest participants, so the ones who started in 2010 in Leeds, have on average almost doubled in size in terms of their turnover. On the topic of finance, as that's what we're here to talk about today, as I said, we come at it more from an outsider's perspective really, because we don't lend specifically to small businesses. Ian mentioned the supply of bank lending to SMEs, which is clearly a critical issue. But there's also the other side of the coin, which is the demand side, and that's really what we're focused on, which is about trying to help small business leaders ensure that they're ready to take on external finance if it's appropriate. They have the desire to do so, because I think you mentioned sometimes there's a natural inclination, particularly on equity finance, to be cautious. And also they have the knowledge of the different options available to them. We've actually found interestingly that successful entrepreneurs sometimes have quite a limited understanding of the finance options available to them. They've just been so busy building their business, they haven't really focused on what comes next and what they might need to grow that business further. So we're trying to equip them with the skills and the knowledge which will maximise their chance of success when or if they do come to make that decision about external finance. The business obviously needs to be on a sound footing in every way, whether that's the finances, the leadership, the management in general. Our programme is therefore quite holistic. It covers 12 different modules over a 3 to 4 month period, creating the building blocks that those businesses need to go on and succeed and grow. And one of the key aspects of it is peer learning. So they're really, Gary I'm sure will talk about this as well, learning from each other. So the entrepreneurs there's obviously the academic aspect delivered by the university lecturers, but there's also working in groups and learning from each other's successes and failures, which we found has been an incredibly important part of the programme. Having a strong business plan, we know from the research we did before we launched the programme that the retail banks in particular want to see strong business plans and forecasts for the businesses so that they can then decide whether to lend against that. So every participant leaves the programme with a business growth plan that's going to help them pitch themselves to the providers of finance. In terms of understanding and navigating the landscape, the finance landscape, we talked about having a natural caution for whether it's loans from banks or selling equity in the small business. And our programme tries to help business leaders to understand what the full range of options is available to them, so they can meet and talk to providers of finance in their region, also talk to alumni who've gone on to take on finance, who come back and then talk about their experiences. And it's clearly having a positive impact. So 90% of our alumni say they have a good understanding of the external finance options available to them, versus about 60% when they start the programme. And about 80% say they have a good understanding of how to win finance, against about 50% when they start. So there is a positive impact there. And they are seeking finance. The numbers are still relatively low on equity finance, in particular equity finance more than peers. On bank loans, about 20% have applied for bank loans, about 10% have applied for equity from angel investors or venture capital. And that's compares to about 12% and 1% respectively of the broader small business population in the country. Innovative finance is a key part of this. Ian, you mentioned it, and I think Gary's experiences will talk to that as well. We found that from our participants, their experience of alternative financing has been, in general, very positive, in particular the convenience and the speed and some of the technology platforms that are available to deliver that finance is being very successful. But we do think that more can be done on signposting the different finance options available to small businesses. As we mentioned, the busy entrepreneurs really don't have the time or the inclination often to spend time researching all the options themselves, and it's very difficult to find out what's available and from where. So briefly to summarise, the debate has, we think, focused on bank lending more so than the demand side of the equation, so the readiness to take on finance. Our programme tries to help small business leaders get the right building blocks in place to enable them to pitch for external finance more effectively. We're clearly having a decent impact on participants' readiness to take on external finance, but changing their willingness is a bigger challenge. And innovative finance, while still small, is changing the landscape, and it's providing new options free of some of the negative preconceptions around traditional finance providers. And a key area for future consideration is better signposting of the finance opportunities that are available. So I'll wrap it up there.
Fiona, thanks. Steve.
Okay, thank you, and good afternoon. I really want to just kind of recap on my time at the British Chambers of Commerce. So I was there from the end of 2007 to around mid-2012, and I saw a lot of access to finance issues for businesses over the course of that time. And when Ian told the story about the overdraft facility being withdrawn, at the height of the financial crisis, that wasn't uncommon. It wasn't just overdrafts being withdrawn. It was renegotiated credit facilities full stop, it was higher arrangement fees, and some pretty bad behaviour by a lot of the high street banks as well. But after that point, after the height of the financial crisis, there remained problems, and the narrative in the media was roughly one of banks aren't lending to viable businesses and holding back the recovery. And I never really saw that as the full picture, and there was certainly different shades of grey within what was happening. On the supply side, there were issues with, credit conditions were a lot tighter than prior to the financial crisis, but that's obvious when you have one of the biggest credit crunches in history. That was always going to happen. Banks were demanding more information from businesses when they were approached for finance as well. And on the demand side, there was a huge lack of confidence from generally the business community as businesses pared back on investments, and they read newspaper articles every day around problems in the Eurozone or problems within the economy, and the idea was broadly survival rather than growth. So there were issues on the supply side and there were issues on the demand side as well. And the other thing I'd say is, at the time, obviously the banks were being pushed by government to try and do everything they could to lend to SMEs, given the stories that were coming in through the newspapers. And my experience of it was the banks actually did a reasonable job of trying to engage with business organisations and trying to find out what was happening on the ground. So they said to us, if you have a business come to you and say that they're not getting a credit facility, come and tell us, we'll look into it, and we'll look into it fast. These were senior people saying this, and they were true to their word. And quite often what we found was that a lot of the businesses coming to us and saying they've been denied some kind of credit facility, it was quite awkward because it was quite obvious to me, at least, that they weren't necessarily providing the right information for finance. And they weren't providing a business plan, they weren't providing a cash flow forecast. It was almost a little bit embarrassing going to some of the banks and saying, look, these guys aren't getting credit. Can you help us out here? And I think that kind of story needs to be told. And we're talking about getting businesses finance ready. We're not just talking about businesses that are high growth, because I think they tend to be the businesses that are more tuned into what's going on in the marketplace, what types of finance are available. It's the jigsaw that Fiona talked about. We're talking about businesses that don't necessarily want to grow as well, having their access to finance for cash flow, which is very important. And just giving them access to basic banking facilities is very important as well. But the outshot of the financial crisis was that relationships have broken down. The relationships have broken down between lender and lendee, and they've broken down directly when these facilities have been withdrawn, but they've broken down indirectly as well. We started to call it, in policy terms, discouraged demand. so by businesses were operating in supply chains in their communities, and they were understanding, or they were hearing stories of not being supplies not being given finance, or reading in the newspapers again that finance wasn't available. They weren't going to the banks for it. It added to their confidence issue. And I used to ask these people, I said, why do you not change your bank? Why do you go to another credit provider if this is the case, if you're worried about getting finance? And the general perception was, and attitude was, that banks are all the same. They all offer the same products, and it doesn't matter where I go to, they're going to provide me with the same thing, there's going to be the same issues. As well as that, a lot of my products and services are tied up with this bank, and it's just an enormous hassle to change it. So that created a problem as well. Which leads me on to the kind of, well, what can we do, and what has been done, and what can we do better? Because I think it's very important that these relationships are mended, obviously, because it's vitally important to the success of the economy. In terms of what we did do, or what the government did do, they introduced things like guarantees on certain portions of loans to businesses that didn't have the cash flow history or didn't have the security put up, things called the enterprise finance guarantee. I think that was a pretty positive move. They did things like, there's various other schemes that the government provided as well as trying to communicate them through organisations and agencies of government like HMRC, which is very positive. But what can they do in the future? Well, I mean, I fundamentally agree with some kind of state-backed investment bank or British business bank. I think that is a good idea. There's some people will say, well, this is just crowding out private investment. I don't really believe that. I believe there is a market failure there. And anybody who's been following the recent debate in the US about the Export-Import Bank, which some people say should be scrapped because it's crowding out private investment, is an important story to look at when we're talking about these things. But the point I've made, or point I'll make here, and the point I've made in all the other fringes I've done, is that when we're talking about state-backed support, we're talking about a British investment bank that's built on a model like the one in America, like the one in Germany. These organisations have existed for 50, 60, 70 years. And if we're really serious about them helping businesses in the UK, we need to be prepared to say, well, this is a long-term thing. This is going to be in place for decades, not a few years, review it, and then realise it's not lending out as much as it possibly can, and then scrap it. It needs to be a long-term approach to these organisations. Outside of the state, and in terms of competition, I think competition gets bandied around a lot as a discussion point in banking. But I think what has thrown up out of the financial crisis, we do have more specialist business lenders, the Aldermores, the Handelsbankens of this world, which are generally very positive, and it's very positive to hear about their engagement with business. And then we have the alternatives, which we all mentioned, but they're a tiny portion of the market, really. And remains to be seen how quickly they'll increase their market share, but they are creating competition and giving a different option for businesses to utilise. But the final point that I'd make, and this goes back to what I said before, was around communication of all these schemes. There's so many of them out there. There's national ones, there's local ones, and just getting the knowledge to businesses through the business organisations, through the agencies of government is very important. But it's also important to tell these businesses what these schemes and finance options actually are. For example, when the EFG was brought in during the financial crisis, we heard quite a lot of stories about businesses going to banks going, I want one of these EFG loans, without them recognising that it's still a lending decision, it's still a commercial decision made by a bank branch, made on the merits of that business operation, but just with a little bit of help from government as well. And I think that's actually crucial in trying to make businesses finance ready.
Thanks. Gary?
How you doing? I think being last, I think I can echo most things that I think everyone's said up to now, and we've certainly experienced, I think, most things as well. I'm really pleased to be here today to sort of share my experience with growing a business, and growing a business at the same time trying to develop new products with the restraints of research and development in doing that, and also the restraints in obviously trying to put the right financing package at the right time. The key to our growth has definitely been finance and having the right finance in place at the right time, and we've looked at various different packages that we'll go through maybe on questions later. But certainly our business is power efficient systems, and we basically manufacture energy saving systems, and we're a solution provider to the energy efficiency market. We've developed new products for the energy efficiency market, and this was from starting the business in 2002. I started the business just with my wife basically and one employee, and we worked out of a very small unit in Standish, which is near Wigan, and we started that by remortgaging the house and putting 25k together, because at the time we didn't really have the support from I think anywhere really. There was a business startup programs that you could basically go on, but again it didn't really fit with what we were trying to do. The business was very much a lifestyle business, I think, until around about 2008, where we really saw that a threat to our business from a competitor, that at the same time we sort of turned into an opportunity really to grow the business. And from that time on, we thought we could do something here, we can go somewhere and really grow. So we initially tried to grow by utilising existing products that we had and look at new markets maybe. But again, very quickly we found that really to grow in the ways we wanted to grow, we needed new products. So we therefore looked at introducing new products, introducing intellectual property into the business, looking at new markets, and we started to grow from there on. The biggest thing, I think that everybody's touched on today, is the finance, and to help us grow, because research and development in products, of course, it costs money, it costs time. Again, getting to, I think, an institution to sort of back you to help you achieve this is sometimes difficult. So we started to grow. We moved to new premises in 2009, which was probably just after the recession started, let's say. And our bankers were great. They allowed us an overdraft which we'd never had before. The R&D started to gather some momentum, and in 2012 we had 10 employees from maybe 2 or 3 before, and these new products started to come into place. Again, to get to the next level though, we needed some funding again, and our existing bankers wouldn't really help us, or they wouldn't really support us in that. So we decided to move banks, and the new bank that we went with would support us with a much larger overdraft. But again, it was enough to allow us to sort of get to that next level and start introducing these new programs. Just at that same time, we were contacted by Goldman Sachs through Manchester University to go on the Goldman Sachs program, and that was just the right time for us, and it was a fantastic program. I don't mind saying that. They supported us in the growth, and it really sort of, it sounds simple now, but it took us out of our businesses to look back in, because when you try to build a business, especially the way we were doing with new products and R&D and whatever, there's so many things going on. They were so difficult to see where the pinch points were, and this program really helped us to do that. And also, I think Fiona touched on before about the network that comes with it. There's a fantastic network of like-minded business people that you could bounce ideas off, and that was fantastic for us. Cash flow, however, still tended to be a bit of a problem. R&D is a sort of a hungry beast. However, we couldn't get much support from financial institutions. We were coming to a point where we were on the brink of a really big order coming in. We were running out of money, and I just had to go out and really borrow quite a few £1,000s just to pay the bills from a private sort of somebody private, let's say. Just as we got that, we negotiated a small loan for sort of 3 months. Just as we got that, the big order landed, which was fantastic. So all the hard work on the R&D and bringing these products together resulted in a £600,000 order. But now it was like, how are we going to deliver this? We've got to deliver this in 9 months. And this is the start of something much bigger, that could sort of snowball from that. It was the first rollout, and we'd sort of targeted multi-site retail organisations for these products. If we didn't deliver that right, then obviously, we couldn't really go on. So to all the different types of finance that were available, from crowdfunding to traditional bank loan, to the guaranteed type bank loan, to invoice financing, and in the end, we went for crowdfunding. It was so simple, and we basically got quite a large loan over a 12-month period, and the funds in our bank within 3 weeks. And it was just so easy, it was great, And it allowed us then to build on what we had. We moved into new premises, Within 3 months, we've doubled the number of employees. We've gone to 20 employees. The size of the site had quadrupled. We've got this new order in. We took new people on in sales, and again, we could kick on now and basically target the more business. Right about that time, I also started a high growth program with Goldman Sachs that was in Oxford University, and again, fantastic, at the right time for us again. It really sort of identified the businesses that were growing from the program, and again, tried to give them a bit more mentoring, a bit more nurturing, let's say, and again, another support program on top of what was there before. Like-minded people, again, all growing businesses, and again, absolutely fantastic. So that was only in sort of June and July of this year. So we've even kicked on from there, and from there, even as we speak now, there's a new website that's been developed which goes live. We've now got 2 new products for domestic, commercial and industrial energy saving applications. We've got, as I mentioned, 1 big rollout. We've got other rollouts coming in there. We've got promises of quite a few different orders, big scale orders coming in. But it's still difficult to sort of fund that growth, and we're in another phase now, in the next phase to try and fund what we want to achieve. We went back to Funding Circle, where this is a different thing, where Funding Circle was fantastic for us at that time, but this time they declined because basically they don't feel as though it's right for them. So we're now looking at alternatives again for funding, might even change bankers again. Whereas I think going back maybe years ago, we'd never even think of changing banks. You know, but it is all about the bankers at the time for you, I think, in your business, and what funding is out there as well, and what's relevant for you, and the stage of your business, really. I think the most important thing as well is the type of finance. It's got to be ethical and sensible finance, because we were offered the guaranteed loan scheme from the government-backed scheme, let's say, but the interest rates were too high, the charges were too high, and it just didn't fit for us at the time. So for us to kick on now, again, cash flow is still going to be a problem. We've done well on the R&D side. We've got tax rebates over 2 years, which has been fantastic for us, and it has helped us again. But our plan takes us to the beginning of 2018, where we expect our turnover to be about 11.2 million from basically the 1.6 million that we forecast for the end of this year. But to do that, we still need assistance, there's no doubt about that, and it's getting it from the right areas that are going to be really, really important. But in saying that, I really don't think I'd be sat here in this position if it wasn't for the Goldman programme and what they've done for us as a business, really. And long may it continue. I think that's the message, really.
Thanks, Gareth.
Thank you.
In a minute, we'll throw it open to the floor. But first of all, I've got a few questions for our panellists. And I mean, in your opening remarks, I'm just very interested in how you view the commercial banking market at the moment. Steve touched on the arrival of newcomers such as Aldermore. We've just seen TSB floated off from Lloyds with a very specific mandate to lift small business lending. Do you see the market as being healthy? Do you think competition is better in the market than it was previously?
Well, I mean, competition's obviously got to be key to particularly the high street traditional funding market, but at the same time, they are still bound by Basel III capital requirements, and that's going to have an impact whichever way you look at it. And some of the sectors, in terms of Gary's sector is one that they will fund because it's energy, greens. It's a sector that they will fund. But if you're in hospitality or you're in property, it's still very, very difficult to get finance because of the fingers that were burned some time ago. So whilst I think competition's healthy and the new entrants to the market, I think Aldermore's actually got a stand here, which I encourage everyone to go and have a look at, is very, very healthy. The introduction of Metro Bank and etc., etc. I still think the underlying principles of traditional funding are much more difficult. And until those become slightly easier, then all the competition in the world will make the market work better, but it won't necessarily make funding easier to obtain.
I mean, aside from some of the things that you touched on, I mean, what might an incoming Labour government do to try and address that specific point?
Well, I was interested in what Gary said about the current guarantee schemes being too expensive in terms of interest rate and in terms of the terms and conditions that were put on some of that borrowing. I think a proper British investment bank that is focused on the delivery of making sure it goes into where market failures happen, and I think market failure has happened in the small business sector. There is a demand issue. I mean, the banks tell me that the reason they're not lending as much as they would like to lend is because the demand's not there. But I think that shows you in itself that people are nervous about going down traditional forms of funding. So I think a proper British investment bank will work. I think a proper geographical bank will work. And I think the Bank of Salford, the city of Salford, is already doing some of that work in terms of concentrating on their own communities, because they know exactly what's happening in there. So I suppose underlying all of this is the government needs to intervene where there's market failure to provide the confidence. And I think if government, an incoming Labour government, can get in place the British Investment Bank with the regional bank structure underneath, it could provide that confidence. And if I could draw an analogy, the Green Investment Bank, which was supported cross-party, was supposed to be the driving force for investment in green technologies. Actually, it's not green, it's not an investor, and it's not a bank. And that maybe tells you where, if you don't get it right in terms of a government intervention, it's not really worth having.
What sort of capital do you think your British investment bank would need to be seeded with?
That's going to be the challenge. The Green Investment Bank was seeded with 3 billion. Was that enough? That was what was available at that particular time. It's going to have a significant amount of seed funding to be able to leave in enough additional cash. But of course, it doesn't have to. It can work with the high street banks and the traditional lenders as well. It doesn't necessarily have to be a direct lender in that sense. So it will require some capitalisation. But this is a big project, and we've already heard from Steve that the models in Germany and the US have been running now since the Great Depression, and that's why they were set up. So it will take a long time. But if we can get the structure right and we can make it properly reliant on going into the sectors where there is market failure, it's about a confidence issue more than anything else. And if there's confidence in the marketplace, it makes it so much easier to deliver.
Now, Steve, you touched on you touched on these regional banking models that Ian referred to, and to which Labour are committed. And one of the problems with the sort of Sparkassen in Germany during the financial crisis was that a lot of them toppled over or turned out to have been behind some of the most negligent lending. Are you particularly taken by what Labour are talking about here?
So, yeah, there's two things, I guess. The first is that I do think a lot of these policies tend to be London-centric, and I think that's a big problem, because I don't think they really take account of the local economic conditions within the markets, etc., etc. I mean, having worked at the British Gentlemen College, you might expect me to say that, because I was always a big advocate of those organisations that were right at the heart of their economic communities. How you actually deliver that is a different question. And I guess one of the problems is that when you have a model where you actually have a lot of schemes provided by government at the moment, but they're so nebulous and disparate, the communication of those products in the first place is a problem. So, I mean, look, and it sounds like a bit boring practical point, but when you have these interactions between the private sector and the state, or individuals in the state, I think it's very important to have some kind of brand awareness and engagement. So when you have things like Business Link, when you have something like Job Centre Plus, for example, it's branded, people know it exists, and that's where you go for it. That's why I think business needs to be able to access those products that are available, that already exist, and that they simply don't know about already.
One of the things that we could also talk about perhaps is the type of lending that commercial banks do. I mean, they are incredibly focused on, certainly going into the crisis, a big proportion of lending was things like commercial property, rather than businesses which actually create jobs, rather than just shuffle around title deeds. How do we get the commercial banks thinking in that sort of direction?
Sorry for me.
Well, any of you.
So the question is, how do we get commercial banks thinking in the direction of promoting sectors that are
less property?
I actually don't know if that is something that what you and I probably think of a traditional high street bank should be doing necessarily. I mean, we talked about all these schemes and the Goldman Sachs schemes. I think there's, obviously roles for partnerships between high street banks and the way they do business and the funds that are available to these organisations, which they can access through the universities or schemes like Goldman Sachs. And that relies on, and there's another problem that was highlighted during the crisis, that relies on, again, that interaction between lender and lendee is where you have a situation where the person in the bank knows enough about business and their needs to be able to refer them to the correct places. That was something that was said was lost prior to the financial crisis as we moved away from that branch model towards a more online model, and that's what potentially we need to get back. Now again, there were government initiatives at the time, there were loads of mentoring programs, etc., and they're all good and useful, but again, they're quite small in the grand scheme of things when it comes to business lending.
I mean, you touched on Basel III. How do we stop commercial banks from hiding behind Basel III as an excuse not to lend? Do you think that's a real issue?
I mean, I don't think they can. I mean, it's quite right. And I think Ed Balls yesterday was quite right to suggest that the regulation of the banking system has been lacking and has to be resolved at a pan-European and international level. But it's interesting because if you look at Gary's story, and it's a great story, but it's a story that we hear time and time again. The initial outlay for Gary's business was a property transaction with remortgaging his own house with a commercial bank. So it goes back to your first question, it was about property. And the guarantee of that property in the background certainly helped that to happen. So banks will have their risk matrix to determine how they will lend. And I think it's quite key, and Steve raised the issue, that they have to have an understanding of what the business is, what the local demographics look like, what the business is trying to achieve, in order to make that risk matrix work. And of course, the underlying principle of all that is Basel III. So there's not a simple answer to that, but I think we need to encourage as a government to ensure that the whole plethora of funding options for small businesses are available, and the knowledge of using those is there, and that's why the Goldman Sachs programme is critical. And I think Gary's dipped his toe in the water of pretty much every funding option that's out there, and that just shows you that you do have to do that. And I'm really interested by the fact that it seems to me, in that particular story, that the more successful you got, the more difficult it was actually to find other funding.
I think that's fair, really. I think that's right. And again, it's back to I think different areas of your growth, really, and who's prepared to support it, but at the same time, what's available out there, because although there might be a lender there who's prepared to support it, it might not be right for us at that point in time.
You mentioned, Gary, you were turned down most recently by Funding Circle,
yeah,
which I find absolutely extraordinary, having been on the receiving end of all their PR, and those of the other peer-to-peer lenders, they do like to give the impression that, here comes a business through the doors and we will lend to them. What sort of process did you go through with them?
It was extraordinary, really. I mean, the initial process was basically, submit a business plan, submit a proposal as to, what you're going to use the funds for. It was quite simple, cash flow forecasts, projections and whatever, balance sheet, and everything was really, really simple at first, and like I say, 3 weeks, money was there, it's great. And it allowed us to do what we've done today. But the second round was strange because what we were looking to do was actually get a new loan from them, pay the existing loan off early. So the repayments would actually be half of what we're paying now. It would be over a longer period of time, but there'd be more cash in the pot for us to achieve what we want to achieve. And they initially asked for 3 months management accounts. And we'd only just started doing management accounts, to be fair, being a growing business and whatever. And the first 3 months were the 3 months that we've grown into new premises, employed 10 more people. There was some costs from R&D as well. So it wasn't great reading that first quarter, and what can we do? That's the fact, that's what it is. So we explained that at the same time, So basically said, no, we feel as though you've maxed out your credit because your management accounts don't look that great. So he said, well, can we submit next quarter's management accounts? And they said, well, we've already made a ruling now, and that's it. Now we did do that, so we submitted it anyway to them with projections for the next 18 months. And we're pretty sure that they've not looked at it at all and just said no. Final ruling was last month.
Do you think that's a fact that they are probably slightly less experienced? Do you think a more experienced commercial banker would make allowances for the fact that outflows are going to be lumpy on occasions, and that therefore 1/4's figures are distorted in this way?
I think so. I mean, I've not got a lot of experience of that, of course, but I believe that maybe they're not slightly regulated in the same ways as maybe the banks would be. And there's obviously someone at the top of the tree there who makes a decision. You know, I mean, my fear again after the first sort of time we were declined was that even if we got accepted, there's a risk factor of A, B, or C. You know, that I would imagine they would have given us a C risk just because they've knocked us back the first time. So therefore, it probably wouldn't have been around funding for us anyway, because the interest rate might have been too high again. I don't know. We never got to that, you know, to that point really.
Now, Fiona, Ian mentioned in his opening remarks that as a country we're not terribly good at exploiting IP from their Britain's universities, for example. In the programme that you've been running, has that been an issue? Have you seen any SMEs trying to exploit IP from Britain's learning establishments?
Well, actually, a number of businesses who've been on our programmes across the country have already worked or come out of incubators within the universities we're partnering with. So once they've got to that, because our programme is focused on the high growth businesses, so once they've established themselves and got to the point where they need that extra boost to go further, so that's how the introduction originally came, was through the university's own incubators. So, and we've seen, I mean, the range of sectors that the businesses come from. Some of them are IP technology businesses, some of them are retail, some of them are industrial. It's a vast range of different sectors, and it's fascinating to see how, you know, these values being created from whether it's just a family starting up or whether someone is partnering with a university. We've seen no lack of ambitious, capable small businesses with potential. It's just some of them get to the point where they're slightly don't know what to do next, and they just need that bit of help to take them on to the next stage. So the university's role, as Ian said, has been very important.
Now, we'll throw that to the horn in a sec, but I'm just going to be slightly cheeky here, Gary. You've got Ian next to you, as an SME owner and an employer.
I need a chat later on.
Yeah. What would you most like to see from an incoming Labour government?
I think support again for small businesses. It's got to be really. It's the lifeblood of the economy, really. You know, I mean, certainly my feelings is some form of programme there is like, you know, funding for jobs really, where, you know, pounds for jobs, where, you know, if you've got a plan together and it's a, you know, it's a proper plan that looks as though it's going to flow, then we should support it. You know, I think that's what I'd like to see, and some form of central sort of agency, let's say, that will inform the smaller businesses and even SMEs. You know, they'll struggle, and some of the medium and larger businesses will sometimes struggle, I think, to get the right sort of financing. So we need like an agency there that can explain all the different elements of finance that are available, and really look at your business and then advise on the best way forward.
Do you want to come back on anything you said there?
Absolutely agree. I mean, whether or not government intervenes on the kind of central agency issue, or whether or not the private sector is in the best position to deliver that through chambers of commerce or otherwise, but certainly, and Steve touched on this too, there is such a plethora of things out there that I think the rationalisation of that would make it an awful lot easier. And you know, I think you're quite right about funding for jobs, and I think that's the thought process around making sure that apprenticeships and employment is actually geared to employers rather than being about a whole raft of administration that would have to be doing. The best people to deliver these kinds of programmes are the employers, and that's the drive what we'll do in terms of apprenticeships and training. But given that Gary's much bigger than me, I couldn't disagree with anything.
Right, let's have some questions and answers. The lady at the back was first. Could you tell us who you are, please?
Yeah, okay. I'm Alison Seabrook. I'm the Chief Executive of the Community Development Foundation. We're a national organisation that works at the grassroots across the country. We have a strategic relationship with a number of finance-related organisations. We've been working for the last 2 years to influence access to alternative finance. So, having targeted these fringes for the last 2 years in particular, I have a glass half full moment in terms of the narrative has shifted from people in the audience being very angry about what the bank should be doing to make things better, to actually looking at alternative sources of finance. However, having also listened to the dire straits that small businesses are in at several other events about the lack of access to finance, I think there is a really missed opportunity around what Steve was saying as well about proper, locally nuanced commercial lending through people can also supply business support. The reason I mention this is we work very closely with the Community Development Finance Association, a membership organisation for community development finance institutions. Forget that name, nobody really knows about them. You will probably know them locally because they are commercially based, non-profit lenders who are very much embedded in their communities. I'll give you an example. East London Business Centre, who has supported organisations like Tata Divine from developing a startup business through the design of really funky jewellery, who is now trading in Hong Kong and in the States in high-end retail stores. My glass half full, half empty side of it is that Labour has now moved on with this, but the only solution can come out with the Sparkasse, and it sort of smacks of previous administrations where an idea is plucked. I'm not saying there isn't a role for it, but it is only going to go a small fraction of the way to meeting the demand. There's a lot of information on the CDFA website about the lack of investment and the gap. In the States, this has been a 30-year programme, significant investment on lending, capitalising, banks incentivised and regulated to invest in alternative forms of finance on a commercial basis. And I think there needs to be a much more innovative solution. Okay, it's not a soundbite like Sparkasse and easy to sell to the public, but you're not going to meet the need if it's just going through just regional bank solutions.
Okay, thank you. Does anyone want to respond to that? Stunned into silence.
I suppose I could. I mean, that organisation, what can that do for a business like mine?
What, the East London Business Centre? They have capital which can lend, but they meet on the basis that they would know you, they would know the area you work in. They can work and help you provide you business support, so you move into trademarking or international trading. I've got the word for it now, but they work with the tiny startups, getting them on the road and also growing, all the sorts of things you described. So there may well be one in your area that can support you, but what they lack significantly is capital investment. Some of them have got relationships with Barclays, for example, but it's piecemeal. Everything's piecemeal. In the States, there are regulatory requirements to do this. Just come back from a study tour. Last year, we met with somebody, a vice president at the Bank of America, who said 15 years ago, we were chucking money over the wall to the CDFIs, and they were chucking their returns back. Now I have a team of 12 people that deal solely with lending to CDFIs. There are hundreds of them. And they were, one of the interesting things from the study tour was we went to 8 separate ones, and each one of them mentioned Hurricane Sandy, that they had been the front line for federal investment to be able to respond to really crisis situations. So that could be large-scale redundancies or large-scale startups. What we don't have is that flexibility and the local knowledge within banking systems, and I think central banks have recognised that. But replicating that just with a regional model is still not going to solve that problem.
I think just to comment on that, it's similar anyway, is that there's a lot of business programs that sort of help you in trying to develop your business and whatever, but then they come to an end. And the next step, once you develop your business, is a cost to grow it. And finance is a big part of that. Not in every business, but I think in the majority of them. And it would be great to have some form of attachment onto these programs, let's say, that that help with that.
Thanks.
Hi, I'm Charlotte Chung. I'm from the ACCA, so the Association of Chartered Certified Accountants, and I work in the small business team. So we do a lot of survey work with our own members, so accountants, finance professionals, and working with SMEs. And I just wanted to share, so a couple of, just to ask you what you thought of their findings. So a couple of things that came up was really practical things, like when we asked them what could banks do, to really help SMEs, they never mentioned kind of like the big policy stuff or the schemes, funding for lending, all of that stuff. They mentioned things like the disproportionate amount of due diligence when you want to take out like a relatively small loan, 50,000 to $1 million. The due diligence is exactly the same. And when you're talking about things like cash flow, SMEs are time poor. They need to get additional support from accountants, finance professionals to do it. And that doesn't seem right. There should be a better spectrum in terms of the risk appetite for taking out smaller loans to much bigger ones. And the second one was kind of echoing some of the stuff that Steve was saying, but about how the branch managers actually know their SMEs really well, but their decisions get escalated up to the credit teams, and it's the credit teams who decide whether they can or can't, pass the credit requirements to make the loans. And the credit teams, because they weren't the people who actually met the SMEs in the branch, they end up coming back with really ridiculous questions, and in the essence they go back to their accountants. And so it just seems like perhaps, well, first what do the panel think of those findings, but also does there need to be a better balance between solutions which are much more kind of macro policy level and these grander initiatives and things which are actually just really practical things which SMEs deal with on a very day-to-day basis, like business planning, banks, not asking ridiculous questions of them, things like that.
Anyone want to come back on that?
Well, I think the first two questions we've had are all about local, isn't it? Credit control committees being based in head office against the bank manager's wishes, overly complicated due diligence when a local person could make that determination up to a certain limit, would be useful. And in terms of the first question, the East London example, that again is about local, and I think that's what we're trying to drive down. I mean, we use the term sarcasm because it's easy for people to understand, but it is about local, and it's about making local decisions because there's local understanding, and that's what those two contributions and questions have been about.
I think I could add to that again. I certainly don't want to sit in and criticise banks in any way because they've helped us. But when you've got a relationship manager with a bank, it is about a relationship in my mind. And they come out to see you and you give them the story and you give them the vision of what you've got for your business and how you're going to grow it. And that's fantastic, and they take all that in. But when, I think as you mentioned, when it goes to the credit teams though, does that same story go with it? I probably don't think it does.
Well, from our members say that it doesn't. So you go speak to a branch manager, they understand your needs, they understand the nuances, and then it goes somewhere completely central escalated, even if it's only for like £10,000 loan, and then it comes back and it's almost like, why bother have gone in to speak to the branch manager in the first place if they can't make a decision for you? So. And
the story is sometimes a big part of what you're trying to achieve. Your numbers don't always tell the tale, in my view anyway.
John Rhodes from BGF. We're equity investors in small businesses backed by some of the high street banks. Have you, just as a question to Gary, have you considered an equity investor? Because a lot of what you've just said is you're looking for someone who's a partner. You're looking for someone who is willing to invest in your growth. And to a great extent, that's not, to Steve's point, that's not quite what debt is there for. Debt is about lending you some money on the basis that from next month you'll start paying me back.
Yeah.
That bank manager is not really incentivized to align himself with your growth, which an equity investor would do.
In answer to your question, yes, we have considered it. We are basically in some respects geared up for it with the right sort of plans in place. Whether now this minute in time is the right time, I don't know. It depends if it's a partner that or an investor that brings added value to the business, and if they do, then we'd always consider it.
Yeah.
I had one bad experience going back maybe 2 years where I basically met two people who said that they could help us greatly with the business. I wouldn't say I trusted them 100%, but they came into the business and we went over to the Isle of Man and we had a look at some venture capitalists there, and quickly I realised that these guys just want 50k each, basically, to put it blunt. We weren't ready for investment. I only know that now. I only knew that really when we started with the Goldman Sachs business program. It could have ended so differently, in a negative way. But in the end, it stayed positive. But to answer your question, yeah, we are interested in looking at that. It's got to be the right partner, and I think a partner that would bring added value.
Even when the current Chancellor was in opposition, I remember him making a speech in around sort of '08 where he talked about levelling the playing field between debt and equity. And now he's in office, nothing more seems to have come of that. I mean, is that something that's actively under discussion in Labour Party circles right now?
Well, the simple answer to that is I don't know the answer. I'm not sure if that is something that's under discussion to encourage that, but it seems to me that we still have a cultural problem with equity, and people do look to fund the businesses through debt. And I don't know if there's a mechanism that can be used, whether it be through the tax system, further through the tax system, or whatever, to encourage that equity transfer to take place. Some other countries are fantastically good at giving away equity. The Germans seem to be very good at just saying, well, if it's, you know, I'd rather have 50% of something than 100% of nothing. I mean, I don't want to simplify and be flippant about this, but things like Dragon's Den do help, because it is a popular television programme, but actually it's about equity for funding. And if we can draw that conclusion between what that does and what businesses can benefit from it, then I think we should be looking at that. There's other things that can be done, of course, to help small businesses. Cash flows, late payment and cash flow is a big one, but also I'm looking at the moment whether or not tax breaks can be given for trade missions and those kinds of issues to give that boost. And again, it goes back to just the simple word of confidence. And you know, if Gary's business has significant confidence, he will grow quicker than whether if he's struggling with filling out funding forms and not really getting responses from the crowdfunders that he thought he may get. So there's a whole host of issues there, but I don't know how you change a culture of equity funding when people tend to look at debt.
Any more
Maybe
questions?
our friend from BDF could tell us.
It's slowly changing. I
Is it?
genuinely believe we've been going 3 years, and there's a bit more confidence in the economy, which is great. But I do think from some of the crowdfunding, you know, the equity-based crowdfunding through Dragon's Den and through a number of other things, people are beginning to look at actually more.
So,
Excuse me. I'm Ed Ainsworth. I'm an entrepreneur with half a dozen businesses. I was on the small business task force that Ian mentioned. I think we've touched on a lot of the issues here. I mean, one, it's important to remember, building on what the lady there was saying, this is actually a big issue. You know, it's easy to kind of talk about it in a quiet way, but at the kind of cold face of small business, this is a massive issue. And I think the kind of interesting thing that Ian said is the government have tried a lot of solutions. It hasn't worked. I think we've got to accept that it's a big issue that's going to need, you know, step changes like the investment bank or like the Spark Hazard or something else, because it's going to, you know, we've got to kind of fundamentally shake up the sector because of big market failures. The other thing that is big issue that, you know, that I see in my business and also talking to people is the sheer timing and the length of time that it takes to get funding agreed, which leaves massive uncertainty in the business. We've had situations when kind of financing can take 3 to 6 months and may not be completed before other financing has run out. And that's a business that can get financing. In theory, they tick all the boxes. You know, you would come and see, yes, that business can get financing, but it's just a question of the time. And I think, you know, apart from the structure, we've got to be thinking of whether it's let's say regulation or something, some kind of challenge, so that people can't go on holiday for a month while they're doing your application, which seems to be quite normal. Or people can't say, oh, we lost it, we'll try again, or we need to, you know, it's all of those sort of things that the big banks in particular seem to really suffer from, and that's a big problem for a lot of small businesses.
I think, as we've said, that's one of the reasons why some of these innovative forms of finance have been so popular, is given their use of technology, they're enabling some of these funds to get from them to the businesses quite quickly. So that's one of the reasons, one of the many reasons they're attractive.
Just one point. I honestly don't mean to sound pessimistic about this kind of thing, but it's not as if the financial crisis created access to finance issues for high growth businesses. You know, they existed for decades before as well. And if you go back to something like the Hansard discussions that were had like in the 60s, you'll see the same business issues come up again and again. It's access to finance, exports. Yeah, exactly. You know, And that's, as I say, I generally don't mean to be pessimistic, because I think a lot of the schemes that the previous government and the current government have put in place have helped businesses. But it just depends whether you think that kind of stuff is scalable or not. And that comes back to a bigger question about the role of the state in individual funding.
So I think you had a question.
Do you think you get state aid approval for KFW if you're launching it now? And so how do you get state aid approval for a much, much larger scaled up business bank? Sorry, that's a bit of a negative question.
I could flippantly say that if KFW had been launched now, that Germany probably wouldn't even ask.
Yeah.
I think 92% of OJEC and state aid applications to the European Union come from the UK, and I think we're the only ones that actually play by those particular rules. So, I do say that flippantly, but it's actually fact, so I'm not even sure people would ask. They would just find a way around it, probably is the answer.
Any more questions? Okay, well, we've actually overrun our allotted session by 10 minutes. Shows that there was a lot of interest in all of this. Thank you all for coming. Thank you to Policy Exchange for putting on the event and to Goldman Sachs for sponsoring it. And above all, thank you to our panellists, Ian Murray, Gary Vizard, Steve Hughes and Fiona Laffan. Thank you very much.